Hey everybody, happy Friday. I'm hoping you guys all had a great and wonderful Father's Day weekend. It was really nice. Hey, I've got about 4 items for you today, all good stuff. First of all, we're going to talk about a community mortgage. This is actually a government entity mortgage that is basically a no ratio loan. So a borrower puts 20% or more down. They have to have a 680 FICO score. They do have to be employed, but maybe they just started a business a few months ago. And typically on a Fannie Mae and Freddie Mac, you have to have 24 months of history or 24 months of bank statements or 24 months of tax returns. In this circumstance, if the person puts 20, maybe 25% down and they have continuing reserves on it, we can actually get a no ratio loan or no income loan, not a no asset. We have to verify assets. So what this does is, like I said, it works great for people that may have just started a business, and it is only for primary residents. So it's called a community mortgage. I'll do some linking down below on it. Second of all, if you hadn't heard, Idaho Housing about a week ago ran out of their money for their bond program. Yes, we stole all the money we could from Idaho Housing, and it was great. They distributed over $225 million of this loan. The next time they are eligible to redo this loan is not until November. But Idaho Housing still has great rates on their loan and 100% financing with their down payment and closing cost assistance. So Idaho Housing is a pretty spectacular loan. Fannie Mae and Freddie Mac, this is kind of a big one. Fannie Mae and Freddie Mac in May released a memo that pretty much says, all these builders are giving away all this money. We have XYZ builder giving out $25,000 for buy downs or showrooms or stuff like that. And Fannie Mae and Freddie Mac said, you know what? This is artificially inflating home prices, or could be manipulating home prices. They didn't use the word manipulating, that was my word, but you get the picture. So beginning September 1st, an appraiser now has to consider all of these enticements to buy a builder's home, or any home for that matter, into the appraised value. So, hypothetically, if you had a $300,000 home and the builder's giving away $25,000, the appraiser may appraise that house for $275,000. They even went a little bit further. Any lender enticements now. So let's say First Choice Mortgage is giving away a free appraisal. That's approximate value of $600. The appraiser has to take that. Or, and I'm going to point out one particular builder in the area, Corey Barton, who does give additional rebates to real estate agents if they sell X amount of homes. Well, let's say Corey Barton and you sold a home and they're going to give you an extra $500 because that's your third home that you've sold in the area. The appraiser has to take that concession into it too, and it could lower the appraisal down. We're getting some clarifications from various different appraisers, but I've talked to 2 appraisers, and that's both of their interpretations. And then last but not least, hey, brokers are really happening. If you're not using a broker, you're being really silly, because brokers are now accounting for 29.4% of all mortgages in the United States. Why is this? Brokers are really better. We have less fees, our rates are cheaper, we have better customer service, just all that. So the banks, the credit unions, the retail lenders, they're all falling down, and the brokers are picking it up. Hey, with that, thank you very much. You guys have a great and wonderful week, and stay cool.